Good morning, everyone. It has Ben Buckner and Dan Botze, who is back from Kansas City. It's a Ag Resource in Chicago. It's Thursday, June 26th. We have got market stable in the macro space, crude oil as well, even in the grain space. And it has been an outright lashing so far this week. And I think a pause is kind of warranted. Spot corn pretty deeply oversold. Funds short in Kansas City and Chicago wheat expanding, probably back to 155,000 contracts or so. So for now, maybe the message is what's next, but we do think that there's still not really threats to building global cash supplies of things. And we've got a lot of macro news happening as well. So Dan, if you want to just jump right into what you're seeing this morning, I'll pass you the mic.
Yeah, no, let's do that, Ben. And thank you for the intro and good morning, everyone. Yeah, we're stable this morning. I'm not sure how much stability we'll keep. I say that because we still got a fair amount of July contracts to liquidate before first notice day tomorrow. July corn open interest needs to get down to like 30 or 40,000 contracts. And so we may have another 40 to 50,000 contracts to liquidate before we get there. So we'll watch that very carefully. But a lot of talk this morning about Trump, and he's already discussing about who will replace James Powell. Mr. President Trump has not been happy with Powell. He thinks he's too late on things. He wants lower interest rates. Within that, he's been very much vocal about Powell being late to the party and always behind the curve, if you will. I think the Fed independence is very important in terms of world markets and world financial stability. But that being said, the president's looking at 3 or 4 candidates going forward. Now, what this has done is it's caused a break in the U.S. dollar. The dollar's has been declining since really Trump came into office in late January. And so he's not how should I say it, disappointed by that. I think on his trade negotiations, it provides some help. But the dollar's been weakening. But, again, a lot of the weakness has been against the euro. So the biggest component of the U.S. dollar index is the euro. I only say that because as we look at some of the other currencies, and particularly the commodity currencies that are out there, not as much weakening as you think forward. And in fact, as you look at the CRB index, this is that broad basket of 28 commodities. Go back to about 2022, and there's not been a relationship between the dollar and the CRB index other than as the dollar changes, so as the CRB. So it was in years prior that when the dollar weakened, we got a commodity rally. Now today, are looking backwards since the pandemic, the dollar and commodities have kind of been moving in sync with each other. And so when you look at this, it doesn't allow me to call for a commodity rally relative to the dollar. And I think this is due to the importance of other currencies. It's not about the G7 anymore. This is about the BRIC countries also. So you need to include in there the Chinese yuan, the Brazilian real, the Russian ruble, not in this dollar index as it sits right now. And I think that's where the commodity market in your head needs to go. So just because the euro is strengthening relative to the dollar doesn't mean you're going to light a fire under commodities. And that's why I point out from the hedge fund perspective, this is a different world than we've been in from about 1980 up until 2020 with the pandemic. And I would say that you need to be careful about being bullish of commodities relative to a weakening dollar. The other thing we'll talk a little bit about here this morning is export sales. They were routine. I think that's the word that comes to my mind. 9.4 million bushels of wheat, 29 million bushels of old crop corn, 14.8 million bushels of old crop beans. I put a line under the total commitments because U.S. corn commitments at 2660 are now 10 million bushels above the USDA's annual forecast. So again, we at Ag Resource believe they need to take that export number up to 2.7 billion bushels. We think they will do that in their July WASDE, but because the July contract in corn is now going into first notice day on Friday and deliverable, there's really not a way to play the old crop corn market anymore. So we lose that opportunity. And so I think export sales, although important, just don't have the same kind of ramifications. As you look at new crop corn sales, 12 million bushels, 5.7 million bushels of beans, not where we'd like to see them. So in a general sense, I need to see an uptake in terms of new crop sales going forward. It has been a week of soil moisture restoration across much of the area that needed it, the upper Midwest. If you go back to the week prior, it was the southern half of the Midwest that saw all of the rain. in the last 7 days, or looking back to the June 25th to June, I think it was 13th time frame, as you see here, you can see that soil moisture has been aptly increased across, Wisconsin, Iowa, Nebraska. Some areas of Nebraska gotten 7 inches of rain, flood warnings out in that part of the world. So the crop setup is very favorable as we head into the month of July. This is one of the best soil moisture profiles that we can find looking backwards over the past decade. So unless we have heat during July, corn pollination is going to come off very well. As you look at the forecast for the next couple 10 days, this is from the EU weather model, plenty of rain everywhere. So whether it's the Canadian prairies all the way down to Mexico, no one's shortchanged on rainfall. Rather unusual from recent years where we've been dry during the month of June, but nonetheless, we've got an ample soil moisture forecast going forward. And in fact, when we then start to think about temperatures, we really don't have anything in the next 10 days that would be worrisome. That eastern Midwest heat, as you will, evades us. We move it out by Monday. We then have seasonal temperatures across the entire central U.S. And when we look forward even into the 11 and 15 day, I've put this map up here from the European ensemble. You can see there's really nothing in terms of extreme heat for the corn pollination that would threaten us all the way into July 13 and early 14. So when you think about the weather, it's about as good as you can get for late June and early July. And I think this is a thing that caps the market as we go forward. On the USDA stocks and seedings report on Monday, everybody's hoping for a bullish report so they can sell it based on the favorable weather forecast. So be aware of that as we look forward. Finally, as we go forward, I don't know where to point for a downside objectives. This is a monthly corn chart. You can see we've broken to the downside now with July corn. There is that gap we pointed out earlier in the week at 390 to 395. But beyond that, my mind would go to maybe like a 350, 370 low for a fall bottom in the corn market. With Brazil's corn crop being record large, I don't think that the competition is going to end for U.S. corn exports like last year. So I think that low will be extended this year, probably until mid to late harvest, just based on the demand profile as we see it today. So if we get rallies in December, March corn, Ben, it's still a sale. We don't see anything taking our foot off the accelerator to the downside.
Yeah, and if remember, we did a lot of work on sort of the progress of the corn crop, and we've got 50% pollination in Illinois on July 13th. So the forecast is already starting to peak into that time frame, and it does look pretty good. And I think too, given the soil moisture profile, I think the next move or debate in the market is going to be, do you add 1 or 2% to trend yields for corn and soybeans? At which point you've got all-time record yields and building stocks even above this. So fine-tuning downside targets, I think, will be the goal of Ag Resource over the next 30 days or so. And even the June 30th report on Monday, it's a pretty big deal. Even if they're within expectations, those numbers, almost every category of new crop balance sheets will be adjusted. So again, dollar gets you in for 30 days. You can keep up with all of our adjustments to our old and new crop supply and demands, and that's price targets for the next 6 and 12 months. And so that's going to be pretty critical. That's kind of where we are. Yeah, again, I think today's stability just needed a pause, but overall, I think the idea is sorting out just potentially humongous corn supplies is the chore of the marketplace. And so it's pretty simple. That's the beginning and end. Unless you got anything else, Dan, before we close off.
No, I think that's it, Ben. These are big crops. This could be the year that we score both a record corn and soybean yield. And I think in the background of this, I'm just getting more and more pessimistic about an Indian or Chinese trade deal. So, we don't have those kind of trade deals, and I'm not seeing progress. I think that's going to be very important as we head into late summer. So with that, everyone, have a good day. We'll be back tomorrow. Good luck on trading, and we'll see if any rally can hold. Stay well, everybody.
All the best. Bye-bye.